Jeff, really good to see you. Today, we are talking through three strategies to minimize your Social Security taxes. Many retirees are surprised to learn that above a certain income, Social Security is taxed. In retirement, it's important to know how all your income streams will be taxed and how to mitigate those taxes. So let's start at the top. How are Social Security taxes calculated?
Yep, that's right, Erin. So Social Security is taxed based on a formula called provisional income.
Hmm.
So provisional income, they take all of your income sources and then they add 1/2 of Social Security as well. And if that income is over a certain level, it causes a part of your Social Security benefits to become taxable. So, for example, with this chart, if your provisional income calculation is under $32,000 for married filing jointly, then none of your Social Security benefits would become taxable. But if it's over $44,000, then up to 85% of your Social Security benefits could become taxable very quickly. Again, this is for federal income purposes. For the state of Oklahoma, Social Security is not taxed at all. So that's very helpful as well.
Hmm. So you mentioned this is all based on your provisional income. Can you touch on that again? What adds up to be your provisional income?
Sure. So included in provisional income would be wages if you have a job, or uh, pension income, or IRA distributions, or rental income, and also any type of required minimum distribution. Also included is municipal bond income. So any income that you thought would be tax-free actually could be taxable because of the Social Security provisional income calculation. And then they
Mhm.
add 1/2 of Social Security as well to come up with that total provisional income.
I can see how that would add up. So, we're going to talk through three strategies now. And your first is to consider converting those tax deferred accounts to Roth accounts because they are your greatest tax liability.
Yeah, absolutely. A lot of people, again, they've done well for retirement savings by putting money into their retirement accounts, their 401ks or 403bs, their thrift savings plans. But a lot of that is going to be pre-tax money, which meant they received a tax break up front and taxes are deferred along the way up until they start taking distributions. And those distributions are going to be taxable, which again flow into that provisional income calculation. So again, you want to be careful with that to make sure that you manage that. One strategy then is for Roth conversions. You can take that bucket of money that's in the retirement funds and do a conversion. It'd be a taxable conversion, but it may make sense strategically to do that over time so that you can reduce your overall taxes later on down the road through this Roth conversions.
Hmm. And your second strategy, you say consider shifting income investments. Some investments generate taxable income, others are non taxable.
Yep, exactly. So in a brokerage type of account, you want to really consider the types of investments. For example, index types of funds are going to have less capital gains. They may have less dividends and interest as well. Active funds may end up, again, resulting in additional income that could affect your provisional income. Also consider annuities. Annuities allow you to defer income gains over a number of years, which again can be beneficial for that provisional income calculation and for deferring your taxes, uh, reducing your taxation on your Social Security benefits that way.
Interesting. And then your third strategy is to delay claiming your Social Security benefits.
Right. So Social Security, you're first eligible at age 62, and ages 66 up to 67 are what's known as full retirement age. It's based on your birth year. Uh, and then you can defer further than that all the way up to age 70 when Social Security maxes out. So it may make sense for one spouse or even both spouses to defer their Social Security income. That may include drawing or doing Roth conversions along the way until they start their Social Security later on down the road. Part of
Mhm.
this can be an overall, again, strategy to reduce taxation in retirement for individuals.
Hmm. Interesting. And I know there's a lot that goes into figuring out the most optimal time to claim Social Security, and it's something you specialize in. So, if somebody has any questions about any of the strategies we've covered, what's the best way to reach you?
So, yeah, so they can go to our website, which is Gorton, Gorton Financial.com, or they can just call our office directly. It's 405 681 9633, and we'd be glad to discuss and help any way we can.
All right. Jeff, thank you so much.
All right. Thank you, Erin. Have a great day.